So, welcome to this presentation. My name is Peter Yusuf. The week has already begun and it's running. It's a quite interesting beginning of the day. We're going to be mixing technicals with fundamentals. So let's start with Euro USDs. This is the daily chart. We can see how the pair is falling. Let me readjust. And we have a breach of the S1 1.1110 support line. The euro side weakened of the pair, and that's why we see euro USD falling. And allow me to better explain myself. We had the release of Eurozone's preliminary PMI figures earlier, about 1 hour ago, not even 1 hour ago. And things are not looking good for the Eurozone. On the one hand, we saw a contraction of the services sector of France, which dropped practically to 44. I would be noting here that that's the worst of the manufacturing sector, sorry. The service sector dropped from 55 to 48.3, and that signaled a contraction of economic activity for the service sector. Practically, the ending of the Olympics brought an easing of business. Later on, about 15 minutes later, we got Germany's PMI figures, where we saw a fall of Germany's manufacturing PMI figure, signaling a deeper contraction of economic activity for the giant of the German economy. While half an hour later, Eurozone's composite PMI also dropped below the reading of 50, implying a contraction across the Eurozone and across sectors. If we drill into the 1 minute chart, you can see the movement right here. And definitely we have, this was at the time of the release of France's PMI figures, signaling exactly the drop and how it hit the euro side of the pair. You can see this 15 minutes later, another wide drop, which was caused by the release of Germany's PMI figures. And half an hour later, that would be here, we see a third drop of the pair before stabilizing at 1.83, correcting a bit higher, but the main element here would be two. The first would be back to the daily chart. The price of Euro USD was in an uptrend since around the 11th, 12th of the month, and that seems to have been interrupted. The pair has also breached the 1.1011 support line. So all of that tends to highlight the bearish predisposition of the pair. Note how the RSI indicator has dropped from around the reading of 62 all the way down almost to the reading of 50. It's currently at 53. So we have a change of hearts among market participants for Euro USD, which is quite interesting. Definitely, we are going to be switching the role of the S1 1.1110 from support to resistance, given that the price action has moved below it. And let's reposition our labels, starting with the S3 at 1.0790, the S2 at 1.0915, the S1 at 1.10. By the way, we're going to be mixing technicals with fundamentals as always, and should you have any trading instrument you would like to have a look at, do not hesitate to add it in the comment section. And if we have time today, we'll have a look at it. If not, we can always have a look tomorrow. Let's have a look at the R2, which is now being placed at 1.12, signaling a reversal of the pair's upward movement right here. That would be at the midst of August. And finally, the R3 at 1.1325. Now, the pair seems to be testing the pre-mentioned upward trend line, and should that be broken, we would be switching our bullish outlook in favor initially of a sideways movement between the R1 and the S1. Should the S1 1.10 be broken, that would be a substantial drop of the pair, maybe even more substantial than the widest, which was here. Then we may be talking about a bearish outlook. For the time being, we expect a relative stabilization of the pair. However, that remains to be seen. The day is not over yet. Let's have a look at USD JPY. Now, USD JPY has an interesting course. There were some mixed signals in the FX market on Friday and during today's early Asian session. However, one pair stood out, and that was USD JPY, as it rose substantially over the past 24 hours. And when I'm talking about 24 hours, I mean since the late European session on Friday. You can see how the pair rose on Friday and today has stabilized somewhat, maybe even some slight bearish tendencies. Let's drill into the 1 hour chart, have a better look. Yep, there is some stabilization here. But for the time being, definitely the 143.45 has to be switched into a support line. And let's go hunting for a new ultimate resistance level. Back to the daily chart. Note these constant attempts for the price action to break this level, and they were successful practically on the 9th of April, 10th of April, while there was another peak right here. I think this is a valid resistance line. And that would be the 150. Let's have a look at 152. Okay, let's be a little bit more exact. 151.95. Yep, that's better. Readjusting the chart. Let's correct the labels. Okay, the R3 is now being set at 151.95 as mentioned. The R2 at 149.35. The R1 at 146.85. The S1 at 143.45. The S2 at 140.15. And the S3 at 137.20. Now, for the time being, the bulls seem to be having it. Let me place some doubt on that. in the sense that despite the pair being on the rise for 1, 2, 3, 4, okay, maybe stabilization today, 5 days, and it has breached the downward trend line which had been guiding it since the midst of July. I'm still a little bit puzzled about the possibility of a bullish outlook. Definitely the bearish outlook has been interrupted, so we abandon that. Yet the RSI indicator has risen nearing the reading of 50, also implying a fading away of the bearish sentiment among market participants who use the JPY. Yet it has still to breach above the reading of 50 to signal the building up of bullish sentiment for USD/JPY. So I do expect that the pair may be stabilizing somewhat. For a bullish outlook, I would require the pair to start aiming for the R146.85. Now, some have mentioned that the pair has an upward trend line like this. Yes, I do see it, I do accept it, but I'm also saying here that it's too fragile for my opinion. I would require more data. If we drill into the 1 hour chart, the picture would become clearer. You can see continuous higher peaks and higher troughs. That would be supportive for a bullish outlook, but in my opinion, only in the short term. And please note that the latest 2 peaks are of the same level, also implying some stabilization. Once again, the RSI indicator in the 1 hour chart is very near the reading of 50. It's actually at 47. I do see some relative indecisiveness on behalf of the market side regarding the way forward for USD/JPY. And I would like to see more decisive movements to the upside. Give me a sec. Let's have a look at the chart. Okay. Let's have a look at GBP USD cable. Now the situation here is a bit clearer. In my opinion, a little bit more interesting. Once again, we note the release of the PPI rates, which was about half an hour ago, if I'm correct. Let me have a check. Yep, 40 minutes ago. The situation turned in September for the worse. Okay, definitely we're noting the fact that the manufacturing PMI figure of the UK dropped from 52.5 to 51.5. The most interesting element, though, would be the drop of the UK services PMI figure from 53.7 to 52.8. Let's have a look at the market reaction here, drilling to the 1 minute chart. Widening it. Okay, there was a minor market movement of only 10 pips. Nothing interesting in the grand total of things. The release did not affect the pair, which is currently on the rise, and it has been on the rise practically since the last hour. Yet that remains short-sighted. It could prove to be a mere correction higher, and it seems to be the case. Note how the pair dropped at around 10ish, which was major. Next big test for for GBP traders is expected to be the release of the CBI industrial trends orders. It's for September. It's in 40 minutes. and it's expected to drop slightly deeper into the negatives to go from minus 22 to minus 23. That would be signaling that even more UK industrialists tend to be cautious, or if you prefer, okay, they may be even more pessimistic about the outlook of sales as orders are expected to drop. And that could weigh also a little bit on the pound. It's going to be interesting to see how that plays out. And allow me at this point to have a look at fundamentals of the pound. I want to have a look what happened at 10 o'clock my time, Cyprus time. Nothing much. Practically it was the UK opening which caused the pair to drop substantially. There was some pessimism on behalf of pound traders. So London was not so kind on the pound as at the beginning of this week. Anyway, for the time being, we note that the pair seems to be correcting higher. Let's drill back to the daily chart, readjusting it. Here you go. The pair was unable to clearly break the 1.3260, and it was also unable to clearly break the upward trend line which has been guiding the pair. And I'm widening it a little bit to the right. So for the time being, the bullish outlook remains as long as the upward trend line remains intact. On the other hand, though, I would like to note that the bullish sentiment had reached a peak on Friday and is correcting lower today. So there may be some fading away of the bullish sentiment, but overall it remains at relatively high levels, implying that buyers are still present for the pair. It's currently at 63.6. I would say that the bullish outlook is still there for the time being. And should that be the case, we may see the pair stabilizing somewhat, given that it has breached the upper Bollinger Band, create some room for the bulls to play, and then jump higher towards the 1.3435. Should the bears take over, we may see the pair breaking the 1.3260. Definitely, it would be a prerequisite to break the pre-mentioned upward trend line, and the pair to start actively aiming for the 1.3030. That may imply practically a 200 plus pips drop. And it may be difficult for such a drop to materialize within 24 hours. So I would expect another 1, maybe 2 days before actually switching my bullish outlook in favor of a bearish one. Okay, let's have a look at USD CAD. This is the daily chart. Note how the pair dropped on Thursday, stabilized on Friday, and remains rather stable today despite the negative gap opening. We tend to maintain here a bias for a sideways motion to prevail, and I'm basing this practically on 2 elements. The first would be the breaking of the upward trend line on Thursday. And the second would be the fact that the RSI indicator remains close to the reading of 50, implying a rather indecisive market. So I would expect the sideways motion between the R1 and the S1 to be maintained. Should the bulls take over, we may see the price action breaching the R1 1.3610 and start actively aiming for the R2 1.3720. On the flip side, should the bears take over, I would expect the price action of USD CAD to breach the S1 1.3475 and set in its sights the S2 1.3340 support base. At this point, it would be interesting to note that we have, if I'm correct, Tiff Maclan speaking BOC governor. That's tomorrow. Yeah, today we have Canada's new housing price index. It's expected to slow down on a month-to-month basis. Nothing much though. Housing is a big issue in Canada though, and there may be some eyes watching this release. But more interestingly, in my opinion, would be the speech of BOC Governor McClellan, which is due to happen tomorrow in the late American session, could create some shocks, especially should the BOC governor maintain a dovish tone. Then I would expect more or less the bearish inclination for the CAD, i.e. the bullish inclination for USD CAD to prevail. Okay, the rest is further down the week. Okay, we have the GDP rates on Friday of Canada there for July. Also an interesting release. Let's have a look at the Aussie. Let's not forget that we have RBA's interest rate decision during tomorrow's Asian session. Now, the Aussie, in contrast to other major currency pairs, seems to be strengthening against the US dollar. Let me readjust the labels. We are in the daily chart, as always. I'm a bit worried, I have to tell you that. On the one hand, we definitely have an upward movement and an upward outlook, a bullish outlook for the pair. Allow me to switch this a little bit to the right in order to catch the truth. But I see some difficulty for the pair to reach higher peaks, and that would become more obvious if we drill into the 1 hour chart. You can see how the pair has stabilized in a sideways motion between the 0.6795 and the 0.6870. It's a span of around 80 peeps or so it's quite narrow. Back to the daily chart. The RSI indicator, on the other hand, seems to be quite high and rising. It's at 63.1.2, implying that the bullish sentiment among market participants is still present, which is a plus for the bulls. So we maintain a bullish outlook as long as the upward trend line guiding the pair higher since the, let's have a look, 11th of September remains intact. And should the bulls remain in control, I would expect the pair to breach the R1 0.6870, starting to aim for the R2 0.7025. Okay. Let's have a look also at USD-CHF. By the way, we have not mentioned anything about RBA's interest rate decision tomorrow during the Asian session. That could prove to be a market mover for the Aussie, and the fact that AUD-USD is on the rise again during today's Asian and early European sessions is not by accident. The market seems to be pre-positioning itself ahead of the release of RBA's interest rate decision. Now, the bank is widely expected to remain on hold at 4.35%. I would highlight also the fact that AUD-OIS implied probability of over 90% for such a scenario to materialize, practically rendering the interest rate decision as such as an open and shut case. Attention now falls on the bank's intentions. And I wouldn't be surprised to see actually RBA to remain hawkish. Should that be the case, and should that be reflected also in the bank's accompanying statement and Michelle Bullock's press conference later on, I wouldn't be surprised to see AUD USD actually gaining further support. On the other hand, though, market expectations may be a little bit too hawkish, and should they not be satisfied, that could more or less turn bearish on the Aussie. However, that remains to be seen. It's going to be an interesting interest rate decision. It's a live one, in my opinion. As not for the interest rate part as such, but for the bank's future intentions. Okay, let's have a look at USD CHF. The USD CHF, which has stabilized. This is the daily chart. I'm highlighting for this pair the release from Switzerland of SNB's interest rate decision, and any dovishness on behalf of the bank could weigh on the CHF part of the pair, practically allowing USD CHF to rise. For the time being, though, I'm highlighting the breaking of the downward trend line, which has been guiding the pair since the 3rd of July. Even if I shift the downward trend line a little bit to right, you can still see how the pair was guided lower from the resistance, from the downward trend line. But that has been broken on Friday, and practically today even more clear. On the other hand, we have to note that the interruption of the downward motion of the pair does not exactly translate into a bullish outlook, given that the price action remains in a sideways motion between the R1 and the S1. At this point, I would be narrowing the distance between the R1 and the S1 in order to hit this true right here and place it at the 0.8370. Let's correct the level as well in order to better reflect the sideways motion or the sideways channel within the price action of USD CHF is currently in. The RSI indicator has reached the reading of 50, also implying that the bearish sentiment among market participants has faded away. Once again, though, the RSI indicator has failed to actually imply a buildup of a bullish sentiment, and that's another reason for us to remain in a sideways movement bias, as does the narrowing of the Bollinger Bands imply. So low volatility could also be in favor of a sideways motion. Should the bulls take over, I would require nothing less than a higher peak than this one. So the price action has to breach above the R1 0.8550 and start actively aiming for the 0.8750. Once again, we have SMB's interest rate decision this week, and in my opinion, that may be one of the main market movers for the pair. Let's have a look at WTI. The commodities prices seem to have hit a ceiling at the R1 7140, so that seems to be holding. Let's drill into the 1 hour chart for more detail. Okay, definitely we have to, 4 hour chart, we have to shift the upward trend line a little bit to the right, but nothing material. Back to the daily chart. There you go. So we tend to maintain a bullish outlook for the pair. On the other hand, though, I'm highlighting the resistance the commodities price is meeting at the 71.14. For the bullish outlook to be maintained, we would require the pair to actually clearly break the 7140 before advancing higher and start aiming for the 75.30. On the flip side, should the pair breach the pre-mentioned upward trend line, that would be a signal, in my opinion, that the upward movement has been interrupted and a sideways motion could prevail. On a fundamental level, I would be highlighting the state of the US economy, the US oil market. I would be highlighting also the situation in the Middle East. It's quite tense, and that may stoke some market worries about the supply side of the commodity should it intensify even further. I'm highlighting this because it hasn't happened yet. At the same time, I would be noting the expectations about oil demand, especially from China. Should the oil demand expectations lower, then we may see them having a bearish effect on oil prices and vice versa. Let's have a look at gold. Gold, which is rising to record high levels constantly. This is the daily chart. And it has breached the... Okay, this is quite questionable. Drilling to the 1 hour chart. It hit practically the 2600 resistance line, and now it has breached it. That happened on the 18th of September. Now it's above it. So definitely the 2600 has to be turned into support line. In red, setting the next ultimate target for the bulls at 2750. We are moving on a scale of around $50. And let's correct the labels. Starting with the S3, which is now being placed at 2470. The S2 at 2530. The S1 at 2600. The R1 2650 was placed, but we have to correct it as we have a new peak. So let's lower it all the way down here. And that would be the 2630, 31. Lowering also now the R2. $2,680. And finally, the R3 at 2,730. Let's drill to the daily chart. Everything now is being placed and locked in. Let's talk direction. And clearly, gold's price is on the rise. The bullish outlook is there, and I'm highlighting here also a positive divergence of the price action in correlation with the movement and the direction of the pair. You can see it right here. Especially the movement on Thursday and Friday. I have one small catch though. On a technical level, I have to note it. And actually it's two. The first is the fact that the price action has breached above the upper Bollinger Band. And the second would be that the RSI indicator has reached slightly above the reading of 70. Both indicators tend to imply or highlight the strong market predisposition, bullish predisposition, and which could drive the price action of gold even higher. On the flip side, though, it may also imply that gold bulls have reached beyond what they could actually grab, and the price is at overbought levels. And if that's the latter scenario, which is valid, then we may see a correction lower of the precious metals price, but even that would be a correction lower. Back to the day 1 hour chart, 4 hour chart, sorry. 1 hour chart, even better. Yeah. It's almost the same. Back to the daily one. Yeah. So I think that should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.
Okay, let's go ahead and get started. So welcome to this week's webinar. Today we're going to be talking about the last part of our Fibonacci series, which will be on projections. So as per usual, before we get started, a risk warning. So our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. A disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay, I'm Melanie. I'm an investment analyst from Everest Fortune Group, who were finalists for Best FX and Equity Research in the years 2019 to 2021. And I will be your speaker for today. So here's today's agenda. We'll do a brief recap on a Fibonacci retracement, the ideal market structure, and then we're going to look at the different Fibonacci retracement levels, and then we'll dive into this week's topic, which is on Fibonacci projections, and then we'll look at how we combine what we learned from the previous weeks and what we're going to be learning today on Fibonacci projections. Okay. And if we have time at the end, we'll also be looking at some charts. So if you have any requests, feel free to pop them into the chat. Also, if you have any questions throughout the webinar, feel free to let me know as well. Okay, let's get started. So here's a simple checklist to follow when first starting out with Fibonacci retracements and some things that you can look out for. So firstly is the market structure clear. So you want to be looking for big zigzags, and we'll show you examples in the coming slides. Next, we're looking at how we can identify the recent trend. So are prices going down or up? And our typical advice is to always follow the general trend. Next, identify a recent major swing low and recent major swing high. So we'll show you examples, but basically you want to look for the most significant swings when you are deciding which charts to use. Next, you want to connect the two extreme points, the highest to lowest, if you're looking at a downtrend, and the lowest to highest if you're looking at an uptrend, like you see here in this image. Okay, so let's first look at an incorrect example. So here's an example of an insignificant swing, which are typically bad points to use for Fibonacci starting and ending points. Price movements here are too small and there are no significant swing highs or swing lows. So you can see we're drawing out the shape, and this is the kind of shape that you want to avoid. Here's another incorrect example. You can see there isn't really any clear shape, even though you can see that the general trend is downwards, but there's no clear swing highs or lows. Price movement is also pretty small. Okay. Okay, now let's look at some correct examples or things that you should be looking out for. So here's an example of significant swings. You can see that there is a clear move up and down with obvious peaks and troughs, and also there are clear market movements. Okay, here's another example. So I've drawn out the peaks and troughs to point out exactly how clear your market structure should look like. Okay. Okay, next point, we want to make sure that you are following the market structure. Okay, here is an example of how not to draw your Fibonacci retracement trend line. So your Fibonacci trend line must follow price structure clearly. In this case, you can see that there is a zigzag market structure. The retracement drawn here cuts through the market structure, making it less effective. So when drawing your trend line, you want to follow price movement and not deviate from it too much. Okay, so something like this, you want to pick market structures with clear upward or downward movement and something that follows price movement. This works better on higher time frames, as there tends to be less noise. So higher time frames could be one 1 hour to 1 hour, 4 hours, 1 day, 1 week as well. Okay, so here's an example again of a clear market structure. So fib tracements can be used in both choppy and trending markets, but it is important to look for clear market structures. Okay, so if you look here, there's a lot of upward and downward movements. So that's what we mean by choppy and trending markets. But the main point is to make sure that your market structure is clear. So here's an example of an unclear market structure. So once again, it is choppy with a significant drop here, significant highs here, but you can see there isn't really a clear market structure. Okay. Okay. Now, these are the Fibonacci numbers that we typically use. So if you've been here for our previous Fibonacci webinars, this will look familiar. But basically, this shows you how you draw your Fibonacci retracement trend line and also the different types of levels, ranging from the negatives to levels that are greater than 100. So the tool that's used is a Fibonacci retracement tool, but it can lead you to 3 types of Fibonacci techniques. So previously we talked about the expansions, which are the negatives, the mid-range, so 23.6 to 78.6. Those are called the retracements, and those greater than 100% are the extensions. So we went through these in our previous webinars, but if you'd like me to briefly go through them again, feel free to let me know in the chat. Okay, so here you can see all the different fib numbers that we mentioned in the previous slide and how it looks like on a chart. So just to recap again, mid-range is retracements, negatives are the expansions, and 100% are or greater than 100% are the extensions. And in all of these scenarios, we are only using one tool, which is the Fibonacci retracement. Yeah, I think it is recording. I think they might publish this webinar on YouTube as well, so you can go ahead and check it out. But if it's not on YouTube by I think the end of next week, you can email IronFX and they'll help you out there. Okay, so let's move on to this week's topic, which is the Fibonacci projection tool. Yeah, you can find me on LinkedIn. I'll pop it into the chat in a little bit. Oh yes, I also wanted to share with you guys this website. So if you're new, when it comes to Fibonacci's, okay, you can go on to the forexarmy.com and it shares exactly how to draw Fibonacci retracements, um, and watch a bunch of videos, extensions, and it shows you an in-depth instructions on what to look out for. So you can see that we recently talked about the unclear market structure, and now this shows you an unclear market structure from an M15 view can actually look clear on an H1 view as well. Yeah. So this area here that we've highlighted is the market structure that was on the M15 view. And yeah, so just because it looks unclear on one time frame doesn't mean that it's not usable. So yeah, you can feel free to pop this to check this out after our webinar. Okay. Yeah. So let's get back to our slides. Yes, so we're talking about Fibonacci projections. So for Fibonacci projection, this uses 3 points. We have a starting point, a middle point, and ending point. So yeah, it's not to be confused with what we talked about previously, which was the Fibonacci retracement, which only uses 2 points. So here we use namely the 61.8, 78.6, and 100% levels. And you want to make sure that you look out for this flash or lightning bolt shape that you see in the GIF here. Okay, let's look at a couple of examples of this. So here's a simple example. You can see clearly the starting, middle, and ending points follow the swing highs and lows of the price structure. So I don't know if you can see the lightning bolt shape. But following the arrows, the green arrows, and then you extend the tail out from the last point towards the ending. So basically where it ends, we're projecting a rebound off of that level. So over here, you can see the rebound occurs at what a 100% Fibonacci projection level. Here's another example with a very obvious zigzag shape again. So yeah, we've drawn out what exactly you should look out for. So you want to take note of the Fibonacci trend line following the market structure closely again, and we're projecting the price to reach this 78.6% Fibonacci extension, so that we can see it rebound off of this level. Okay, so let's see how this plays out. Um, and yeah, so you can see that price bounces off this level just as we expected. Okay, maybe I'll just pop the link for the Forex Army website in the chat first. Okay, and yeah. Okay, so here's another example. So we want to take note of this zigzag shape once again. This time we see it inverted. Okay, but it's still the same concept. So the starting point would be here, middle point, and ending point. And we're projecting where prices will bounce off of in the future. In this case, if you have the 78.6, 61.8 levels shown here, you can see that price has already broken out of these levels, and that's the reason why we're projecting it towards 100%. Okay, so let's see how this plays out again. Okay, so you can see price reversed off of the 100% level nicely. Okay, so you can also draw invalid Fibonacci levels. In this case, we're talking about invalid Fibonacci retracement levels, and because this tends to be more common than a Fibonacci projection level. But one of the most common scenarios of this is when price makes a lower low. Assuming you are drawing a Fibonacci retracement from the top to the bottom, then yeah, it will make sense for you to make for price to make a lower low. I'll show you an example in the next slide. But if there are bars on the right that break your ending point, it becomes invalid. There are Fibonacci retracements that are negative. Previously we talked about Fibonacci expansions that are minus 27 and minus 61.8. So even though those break below the 0% level, those are still considered valid. Um, and I'll touch on those in a little bit. But this is the example of an invalid retracement. So price has already broken below the 0%, right? And that you see over here with the arrow. So price breaks our ending point on the right, and hence we cannot use this ending point as our retracement. So you want to always remember to pick the lowest point with nothing on the right of the ending point. Okay, now let's look at how we can combine all of the retracements and the projections that we've learned so far. Okay, I'll give you guys an example of um buying. So if it's the other way around, so if your starting point was here, ending point here, then it would be an invalid retracement if price breaks above that 0%. So basically, as long as it doesn't break below this 0%, then you're good to go. But we'll look more into this when we look at the charts. Okay, so let's talk a bit about Fibonacci confluence. So Fibonacci confluence is basically when you combine multiple Fibonacci retracement levels together so that you can increase the probability of your Fibonacci levels working versus a single Fibonacci level working. So it's basically combining all of your Fibonacci retracements, but also with your projection that we just learned. So in this example here, we have three different Fibonacci methods here. So firstly, we have the minus 27% Fibonacci expansion, which is indicated by the red arrow. That lines up with the 161.8 Fibonacci extension, indicated by the gray arrow. So for extensions, we look for a Nike tick. So this would be the shorter part of the tick, and the tail of the tick would be this black arrow here. And then we have a 78.6% Fibonacci projection. So you can see all of these levels line up closely, giving you a confluence area. So most of the time for confluence areas, we're looking for an area, like a small area, not so much a specific level. So it's okay if your levels deviate from each other by a little bit. Okay, so you can see price bounced off the Fibonacci confluence area over here. Okay, in this example, we have two Fibonacci methods. We have the Fibonacci extension, which is the Nike tick method. And this is the 127.2% Fibonacci extension level, and it's in line with the 61.8 Fibonacci projection level. Okay, take note of the flash shape again. And for the Nike tick, can see that it's an inverted V shape, but it's only valid once the tail exceeds past this 100% level here. Okay, and then we can see price bouncing off of this confluence area here. Similarly, here we have the same two Fibonacci methods, extension and projection. Here the 127.2% Fibonacci extension. So the Nike tick would be starting point here, ending point here, and then the tail is here. And that is in line with a 100% Fibonacci projection. So your starting point would be here, middle here, and ending point here. And you can kind of see the lightning bolt shape as well. Okay, so that all lines up in this area here to give you a reversal because of the strong resistance level. Okay, next, in this example, we use a 61.8% Fibonacci retracement that's in line with a 100% Fibonacci projection to give us a strong confluence area over here, where price has bounced off of. Okay, I think by now you kind of get the idea. It's basically just finding a bunch of levels that line up to form a stronger resistance or support level. So in this example, the minus 27.2% Fibonacci expansion, which is in blue, lines up with the 127.2% Fibonacci extension, which is in purple. This is also the inverted Nike tick. So the head would be here, or rather the shorter part of the tick is here, and then the tail is here. That all lines up with a 100% Fibonacci projection to give a strong confluence area below here. Okay, so for Fibonacci expansions, if you were here for our previous webinars on expansions, you will know that for expansions, we're looking for a flash shape or zigzag or lightning bolt shape. So that's really similar to what we look for when we want to use a Fibonacci projection that we're talking about today. So typically, you would be able to use the Fibonacci expansion and the projection together. And how that would look like would be something like this, just without the purple arrow. So for an expansion, you would take the starting point and the ending point to be the first line of your lightning bolt shape. And then your projection would be the V shape that follows that same shape. Okay, I hope I'm making sense, but you can kind of just see it over here on the chart. Okay. Okay, so in this example, we have a swing low support over here and one long-term 100% Fibonacci projection that is in line with another short-term 61.8 Fibonacci projection. So that makes a strong confluence area over here where price bounced off at 81.084. Okay, so you can see price bounced off after this 61.8% Fibonacci projection line up with another Fibonacci projection. Okay, so following our Fibonacci techniques, trade management is also super important. So what we typically recommend is to place your stop loss beyond your key confluence area and your take profit before it. So for stop loss, the reason to place your stop loss beyond it is because more often than not, price is attracted to such strong areas of Fibonacci confluence. So if your stop loss is right before instead of beyond that confluence area, you'll most likely get stopped out before the market reverses. So that's also one of the reasons why people wonder why they got stopped out right when the market starts to reverse and then complain about stop hunting. So for take profit, we recommend to place your take profit before a key Fibonacci confluence area because there is a high chance that it won't be able to go beyond that level. So instead of reaching your profit target, it reverses back to your entry or even worse, your stop loss. And that's why people complain that the market is being manipulated because they might miss their take profit by 1 or 2 pips. So you can see in the example I've included over here exactly how you should place it if you are going in for a buy entry. So the opposite, if you're going for a sell entry, it will just be the opposite. Okay, now let me pull up my charts and then we can take a look at some live analysis. Okay, feel free to let me know in the chat if you guys have any requests for any charts that you'd like me to go through. Okay, let's go ahead and maybe we'll start off by looking at gold first. Okay, so let's start off by looking at the higher time frames first so that we get an idea of what the general trend is. So on the weekly time frame, we can see price moving upwards. Okay, so we start off by looking for any trend lines or trend channels. I don't think we have a trend channel here. Okay, actually we do. So what makes a valid trend channel is if there are two touches, at least two touches at the top and at the bottom of the channel. Okay, so we have an upward trend here. If we look at our daily time frame now, okay, you can also see that um it's moving in an uptrend as well, also in an ascending trend channel. Okay, so let's add some support and resistance levels here. Okay, so here would be my first support and my first resistance here. So I typically will try and look to see if I can pull it back as far as possible so that we can see how significant that level is. Because the more times price has tested that level, the more likely it is to reverse off of it again. Okay, so this would be my second support. And then my second resistance would just be at this week high. Okay, let's look at our 4-hour time frame. So on our 4-hour time frame, we can see that price recently broke out of this ascending trend line, or descending trend line, sorry. Okay, so that gives us a bullish signal, especially because our daily and weekly time frames all gave us bullish signals as well. Okay, this was my first resistance, and then my second resistance is here. Um, I will place my first support here because we have two swing lows. You can see price testing it a lot, but it's cutting too many candlesticks here. So it's not a good support level to use. Okay, I'm gonna place a intermediate level here. And my first support would be here. Okay. So now we can go in with our Fibonacci levels. Starting off, I can see that we have a Nike tick shape here. Okay, so I'm gonna use Fibonacci retracement. So for retracements, we use the 100% levels. So 127.2, 161.8. And you can see that um price is currently testing that 127.2 in line with the first resistance, and the 161.8 is also in line with our second resistance. Okay, and for our projection, you can see this lightning bolt shape. So I'm gonna use this trend-based fib extension. That's what they call it on TradingView, but I think if you're using MT4, they call it something else, but it's the same shape, the same symbol. Okay. And we use 61.8, 78.6, and 100%. Okay, so this 78.6 lines up nicely with my intermediate resistance, and 100% also lines up with my first resistance. So I'm just going to keep those two. Then earlier I mentioned that typically if you can find a lightning bolt shape for your projection, you can use it for expansion as well. So for your expansions, we're looking at the negative numbers. So and you can see that they line up nicely as well. Okay. Okay, I'm gonna look for a retracement from here to here. For retracement, we look at the mid-range levels. Okay, so we can see the 61.8 lines up with, lines up with the intermediate level, and the 78.6 lines up with my first resistance. So I'm just gonna keep those two levels. Okay. So we can see we have three levels lining up over here. Actually, we have four levels lining up here. Okay, at our first resistance. So that area is likely to attract price. And it also goes back pretty far. So that's why when we're looking for levels, we want to push it back as far as we can without cutting too many candlesticks. Okay. Yeah, so we're seeing price testing our intermediate level now because it does have two levels lining up with it. So it is a confluence area, but it's not as strong as the first resistance. So we'll likely see it break above this level and head towards our first resistance. So now let's support this analysis by using some indicators. So I like to use Ichimoku and MACD because at one glance you can see exactly what the signals are. So price is moving above the Ichimoku cloud, so it's giving us a bullish signal. MACD is also giving us a bullish signal, so it also supports our analysis. And let's look at RSI and stochastic. Okay, RSI is also moving in an ascending trend line. Um, Okay, but stochastic isn't telling us much. Now let's look at Bollinger Bands. Okay, you can see price pushing above the upper band. So it is also giving us a bullish signal here. Okay. I think there was a question about if it is an uptrend. If you'd like the recording, I think it will be better if you email IronFX, um, and they will probably send it over to you after this webinar. Because I don't have access to the recordings. Yep, so there was a question, if you're buying, will you trace from lowest price movement bottom to top? So if you're looking at a retracement, you would look like you would probably do something like that. And then retracement would be the mid-range. So we're looking at these levels. So yeah, bottom to top. So your 0% would still be at the top and 100% below. Okay. Do you guys have any requests for any charts you'd like me to go through? I think we have time for one more chart. Okay. Let's go ahead and look at um let's look at DXY. Actually let's look at AUD. Okay, so on our weekly time frame again, you can see prices dropping. Okay, we see prices moving in this descending trend line. Okay, on a daily time frame, mm, on the daily time frame, there isn't really any trend channels or trend lines, but it is, I wouldn't say it's a downtrend either. It's kind of ranging. Okay, so let's just go ahead and add some levels. So this is my first support. Then my first resistance would be here. And then I just place my second support somewhere here. And then of course at this swing high, that would be my second resistance. Okay, now let's look at our 4-hour time frame. Prices are also really kind of ranging as well. In fact, let's see if, okay, no, there's no trend channel. Okay, so we have a support level here, and let's see if I can pull it further back. Okay, no. So this is my first support, and you can see that it's an overlap support, which basically means that there are swing highs and swing lows that line up with that level. Okay, and then my first resistance would be here. Okay, this would be my second resistance, and my second support would just be here. Okay, I think you can see price moving within this channel here. I think we would continue to see price kind of testing this area. Um, but let's just do some analysis anyway. Okay, so starting off, I'm gonna look for a retracement. So I can see that price lines up, or rather this first resistance lines up with the 23.6. Yeah, I think the 38.2 as well. See. Um, okay, we don't have any projections. I think that's all the levels that we have. Oh, okay. So if we zoom out, we also have this retracement here. Okay, so um my 61.8 lines up with my first support, 78.6 lines up with my second support, and yeah, so even though this 38.2 lines up with the second resistance, we can't use it because price has already broken out of that level. Same goes for this 50%. So we can only keep our 61 and 78. Okay. Okay, and my 61 also lines up with my second support. Okay, now let's look at our indicators. So price is moving below the Ichimoku cloud, so it's giving us a bearish signal. MACD is also giving us a bearish signal. Okay, so you might want to go for a sell from where price is at now to our first support. Since there is quite a bit of resistance at this level here. Okay, because we have two swing lows here, and can see price testing that same level with the 61.8 as well. Let's look at RSI. Okay, not much. Let's look at moving average as well. So moving average, what I like to look for when using that is looking for any of these crossovers. So crossover basically means that there is a change in trend. So over here, we could see price moving upwards. The minute we see price crossover, that's a signal that the trend is going to change, and then we saw price drop after that. So we could be seeing price continue to drop as well, or until it crosses over again. Okay. So yeah. Okay. Let me know if you guys have any questions. If it's all good, I think someone requested for my LinkedIn, so I'll pop that into the chat now. And yeah, if there's no questions, that's all the time we have for today. I hope you guys found it helpful, and I will see you guys next week. Thanks, everyone. Bye. Bye.